Forget the noise and forget the chaos of the chart that leaves you confused and second guessing. Aren't you guys tired of watching those standard candlesticks jumping up and down like they've had 10 bottles of energy drinks? What if I told you that there is a way to silence this fluctuative madness caused by candlesticks, to see the market's direction with absolute clarity? Now, welcome to the market maker strategy. In short, I like to call it the Mama strategy. In this strategy, all you need is a candlestick called the Heikin Ashi candlestick, the MACD indicator, and then the Bollinger Band indicator. And if you're thinking that this strategy will be difficult, I just showed it to my 97-year-old grandma with dementia. And she's currently printing cash, no caps. This video is going to be in a step-by-step format so that y'all can simply comprehend and understand it. And as you know, the best part is always the last step. So do well to watch this video to the very end to have full knowledge and understanding on this topic. Right? Like this video, subscribe to the channel, and drop a comment of the next topic you want us to talk about, as your contribution helps grow the channel. Now, without wasting much time, let's dive in. Like we mentioned, the strategy has to do with the combination of Heikin Ashi candlestick, MACD, and Bollinger Band. Now, the first question you're probably asking is, what is a Heikin Ashi candlestick pattern? The word Heikin Ashi is a Japanese term that means average bar. It is a type of charting technique that modifies the standard candlestick. Now, the Heikin Ashi filters out market noise and provides clearer picture of the trend. Now, how does Heikin Ashi filter out market noise and provide clearer picture? So guys, this platform is Bybit. Okay, I'm using Bybit platform, and in order to turn on your Heikin Ashi candlestick, all you have to do is, after going to the chart section, you just locate this settings bar over here. When you tap on the settings bar, you're going to bring it to this interface where you locate orders, click on orders, and then this place over here is where you choose your Heikin Ashi candlestick. Right now, this is the average candlestick. This is the normal traditional standard candlestick. This is the open, high, low, close candlestick, and then this over here is the Heikin Ashi candlestick. So you just tap on it and then go back to your chart. And if you notice, you're going to see that the Heikin Ashi candlestick is a little bit different from the average candlestick. Don't worry, we are going to actually tell you all the components of the Heikin Ashi candlestick and how it is a very simple tool in actually filtering out market noise, and then easy for you to understand trend direction. Right now, unlike the traditional candlestick that are displayed by their open price, high, low, and closing price, the Heikin Ashi candlestick uses a modified formula based on average and calculated data from current price. Don't worry, I'm going to break down all this English. In essence, it means that it makes the trend easier to identify. For example, in a strong downward trend, the Heikin Ashi candlestick is characterized by a series of red candlesticks with no upper wick. Now take a look at this down movement. You're going to see that the Heikin Ashi candlestick most of them have lower wicks, long lower wicks, but they don't have an upper wick. Now this is indicating for you that this place over here is experiencing a very strong downward movement. Okay, that's how you identify a strong downtrend. All right, and on a strong uptrend, let me go to an uptrend. So on a strong uptrend, the Heikin Ashi candlesticks are characterized by a series of green large candles or candlesticks with no lower wicks. So reverse is the case for an uptrend. On the downtrend, they've got lower wicks, no higher wicks, no upper wicks. But on the uptrend, they don't have a lower wicks, but they have upper wicks. Okay, they are indicating that the market is strong enough for you to enter. Okay, now the trend may be weakening when you see small bodies or small doji candles appearing after a series of large ones. All right, now what this actually means is, if you notice, you're going to see that on our way up, as we get to this level, let me use the arrow, as we got to this level, there is a doji-like candlestick pattern that has both upper and lower wicks. There are at least two doji candlestick pattern that do have upper and lower wick. Now, whenever you are using a Heikin Ashi candlestick and you see this type of candlestick appear in this doji, it is indicating for you, or it's indicating that the trend wants to change either from the bullish to the bearish or from the bearish to the bullish, because this place also has a doji candlestick pattern with both higher and lower wick, okay, indicating a reversal to the upside. Have you guys seen how simple this is? Like, so there's this kind of trading strategy, and people are out there, trying to know where the trend is going, the direction of the market, and so on and so forth. All right, let's go back to our video. The appearance of a long upper and lower wick, especially after a series of long candles with no upper or lower wicks depending on the trend direction, is an identification or is an indication of the possible change of market direction. So what this is trying to tell you is that whenever you see anything like this doji candlestick at the top or at the bottom of the market or of the trend, it is trying to tell you that the price wants to change from the downtrend to an uptrend, or from an uptrend to a downtrend. Now this approach helps to smooth market noise and makes you feel less confused, and it helps you in identifying reversals and simplifying your trading decision. But as sweet and enticing as this may seem, it is always advisable to apply other technical indicators to help give more confluences and reasons to place a trade, and that's where the Bollinger Band and MACD comes into play. Alright, now starting with the Bollinger Band. In order to turn on our Bollinger Band, you're going to see there are a series of indicators over here, the one I'm touching. Alright, so all you have to do is locate your Bollinger Band over here. Alright, locate your Bollinger Band over here and then turn it on. So my Bollinger Band is turned on. On the screen, you're going to see a series of 3 lines: an upper band, the middle band, and then the lower band. Don't worry, we are going to explain what it is, what a Bollinger Band is, how it's been used, and so on and so forth. Okay, now Bollinger Band is a technical analysis indicator that are used to identify overbought and oversold conditions in the market. Now, overbought means that the price is expensive and might go down at any moment, while oversold means that the price is cheap and buyers may step in to drag price up to the top. Okay, now the Bollinger Band has 3 major components. The Bollinger Band has 3 major components. The upper band, which I normally call the expensive price indicator, which is this band over here, the band that covers the price. Okay, it serves as a resistance. Okay, when price hits this upper band, we anticipate that the price is too expensive and is due for correction or pullback. So if you notice something, you're going to see that anytime price hits this upper band, the price normally goes down, not all the time, but most of the time. So it is indicating that at this point, the price is over expensive and is due for correction. All right. And we've got the middle band, which is this yellow line over here. Let me indicate it, this yellow line. And the yellow line is nothing but the simple 20 period moving average. Now, the moving average just tells if the price is stable. So when the price is at the middle band, it means that the value of the price is neutral. All right, the value of the price is neutral. Sometimes you're going to see that on the middle band there's going to be like some doji forming. So this is as a result of the neutral condition of the price at the middle band. Then the third is the lower band, which I normally call the cheap price indicator over here. Okay, this is the lower band, and the lower band only works when price hits it, and whenever price hits the lower band, we anticipate that the price is too cheap and buyers may step in to buy this asset at a cheap price and then push price back up. So in general, whenever you see price hitting this lower band, just look out for a doji like candlestick pattern on the Heikin Ashi, so that whenever you see this doji like candlestick pattern, it is going to indicate for you, or it's going to tell you automatically that the price wants to go up to the upside. And then when it hits this upper band, just keep an eye to see a doji like candlestick pattern. When you spot it, then you can get prepared to enter a short position or a sell trade. Okay, I hope you understand what Heikin Ashi candlestick is, how it works, and then what Bollinger Band is and the components of a Bollinger Band. Now we have the Heikin Ashi candlestick to tell us the current trend direction. We have the Bollinger Band to confirm if the trend is due for reversal to the upside or downside, so we can know when to enter or exit. But with all this, we won't be confident if we don't know. We won't be confident if we don't know how strong the trend is. Now that is where the MACD comes into play. So before I start explaining or talking about what MACD is, I am first of all going to turn it on. So over here, let me indicate it for you. You are going to find your MACD, and as you can see, my MACD is situated right here. Okay, so I'm just going to touch it and turn it on. So the MACD is turned on and it doesn't show on the chart, it shows below the chart. Now this is how the MACD looks like. So MACD is a technical analysis indicator that measures the strength and momentum of a trend. It helps you to see when price move is getting stronger or weaker. So strong price momentum means you should stay in the market longer. Weak price momentum means you should prepare to exit the market. So strong price momentum to the upside means keep staying in the market for a bit longer, but when the weak price momentum to the upside emerges, then you start preparing to exit the trade. And strong price momentum to the downside means that you should stay in a short position a bit longer, but when the weak price momentum to the downside occurs, you are expected to exit or start preparing to exit. Don't worry, I'm going to break down everything for you. Now, how can we spot strong and weak price momentum using MACD? We do that, let me clear this. Great. So we do that with the MACD component, okay, with the use of the components of the MACD. Now, the MACD comprises of three primary components, and they are the MACD line, this one over here, let me show it to you. This blue line over here, that's the MACD line. The signal line, this one over here, and then the histogram, which are these bars that looks like a service bar. Now, the MACD line is quick to react to price. So the MACD line reacts to price quickly before the signal line, and then the signal line reacts to price slowly compared to the MACD line. Now the histogram bars tells you how strong or how weak price is, and then with the use of color difference and bar size, you can be able to tell how strong and weak price is. Now, how does MACD work? That's the next thing we need to understand. How does MACD work? Whenever the MACD line crosses above the signal line, it is indicating that the price of the asset wants to increase. Okay? It is indicating that the price of the asset wants to increase and the price wants to move up, and will make the histogram bar to start printing green or dark green bars and large bars. And when the bars start to shrink or get lighter or hollow, it means that the pressure from the buyers are getting weaker and is a signal to exit the bullish trade. Now, what this typically means is that this place over here, there's this blue line, which is the MACD line. Whenever it crosses above this signal line, which is the yellow line, it is indicating that it is a beginning of a new uptrend, as you can see. And at that moment, if you notice, just over here when the crossover occurred, you're going to see that there's a new green histogram, series of histogram bars that are forming over here. Now, this histogram bar is indicating that the bulls have got into the market, and if you make an entry over here, you are going to actually go up to this level, and if you go up to this level, you are in profit if you buy. And at the same time, if you begin to see a weak green or a full green histogram bar forming, it means that the trend is getting weaker. That's when you're going to start spotting this doji like candlestick pattern, and you should start getting prepared to leave the market, to exit the market. Okay, and upon that, you're going to start seeing series of red Heikin Ashi candlestick forming. Okay, I hope you understand this. So let's move to the next part. Whenever the MACD line crosses below the signal line, below, not above, below the signal line, it is indicating that the price of the asset wants to decrease and go down. Now, this will make the histogram bar to start printing dark red or reddish black color with large bars. Now, when the bar starts to get lighter or hollow, it means that the price from the sellers are getting weaker, or the pressure from the sellers are getting weaker, and is a signal to exit the bearish trend. As simple as that. So reverse is the case. When you see price, let me show you. When you see price, when you see the MACD line, which is the blue line, crossing below, not above, crossing below the signal line, it is telling you that at any moment from now, the bears are going to actually get into the market, and then you're going to start seeing red or deep red histogram bars forming. Now, these deep red histogram bars are telling you that the bears are strong in the market, and then you're going to see that the Heikin Ashi candlestick is forming candles with lower wicks, no upper wicks, an indication that the price wants to continue to the downside. Okay, but if you start seeing these histogram bars getting reddish black like this, it is trying to tell you that it is time for you to exit this trade, because the bulls or the buyers have started to actually step into the markets. I hope this is understandable by you. Now, we are going to go to the most important part of this video, and the most important part of this video is how can we know, or how can we combine these three powerful tools to have a crystal clear information and entry signal. How can we know or how can we combine these three powerful tools to have a crystal clear information and entry signal. On an uptrend, the first thing you should look out for is the doji-like candlestick at the bottom of the Bollinger Band. On an uptrend, the first thing you should look for is the doji-like candlestick at the bottom of the Bollinger Band. Am I getting understood? You have to see a doji-like candlestick pattern, and that doji-like candlestick pattern should be situated at the lower band. Okay, it should be situated at the lower band of the Bollinger Band. That's just what it means. Okay, that's the first thing you should do. Now, this doji-like candlestick pattern, although this doji-like Heikin-Ashi candlestick pattern has an upper and lower wick. So that doji-like candlestick pattern that you're going to see at the lower band of the Bollinger Band should have an upper wick and a lower wick, indicating a weak bearish momentum. Okay, indicating that the trend is weak and is about to reverse to the upside. Now, if this doji pattern is found on the bottom of the Bollinger Band, and then you see the MACD line crossing above the signal line, just like it did over here, can you see the MACD line is crossing above the signal line and printing green histogram like this? Am I getting myself clear? So then it means that the new uptrend wants to start and we can enter a long or a buy position. As you can see, guys, I am on a live trade, no caps, right? I'm on a live trade using this strategy, and it's working perfectly. I'm using just $10 and I'm up $1. This is for experimental purposes. Okay. If there's anything you don't understand, you can reverse the video and then watch it over again. Now, on a downtrend, the first thing you should look for is a doji-like candlestick at the upper band of the Bollinger Band, not the lower band. On a downtrend, the first thing you should look for is a doji-like candlestick at the upper band of the Bollinger Band. Now, let's look for a doji-like candlestick at the upper band of the Bollinger Band. Let's go back. All right, so this is a doji-like candlestick. Let me show you. This is a doji-like candlestick over here, and it is situated at the upper band of the Bollinger Band. Now, this doji-like candlestick at the upper band of the Bollinger Band has an upper wick and a lower wick, indicating that the uptrend is getting weaker and is about to reverse to the bearish side. Okay, if you notice, you're going to see that there's an upper wick and there's a lower wick. Okay, this is the upper wick and then this is the lower wick, indicating that the market wants to actually go down. The average price is actually getting reversed. Now, if this doji candlestick is found at the top of the Bollinger Band, and then you see the MACD line crossing the signal line just the way it did right here, it's crossing below the signal line, which is the blue line crossing below the signal line, and then you start seeing emergence of this histogram, deep red histogram bars emerging. It means that there's going to be a downtrend, and as you can see, there was a downtrend, and the downtrend doesn't have an upper wick and it has a lower wick, indicating a strong momentum. Now, the confluence of these three indicators or these three tools will give you confidence in entering the market and making profit off of it. So guys, in essence, the edge isn't in mastering the strategy alone. The goal is to manage your risk long enough to figure it out. Don't think that, okay, oh, this is so simple, let me just put all my capital, full margin, no stop loss, let me just see how it goes. So I used to watch motivations on the internet, on YouTube and other places, telling me that once I'm profitable, I can make all my losses within a week. Bro, it doesn't work that way. You've got to respect the market. Now, the goal is to manage your risk and learn consistency. This is what every profitable trader have in common. So trust the journey, and your future self will thank you. I hope this video helps, and I hope you have a nice day.
Break the pattern today, or the loop will repeat tomorrow. Break the pattern today, or the loop will repeat tomorrow. You must break the pattern today, or the loop will repeat.